that.
Yeah?
Whatever you prefer. I don't.
Oh.
Oh. All right. Good afternoon, everyone. We appreciate you joining us during your lunch hour, and we'll try to keep the conversation on the lighter side. I'm thrilled to be moderating this panel. We have a lot of experts up here. You know, we're talking a lot about, you know, digital assets, emerging trends in disruptive technology today. It's a really dynamic space. So we're going to talk a little bit about, you know, some of the regulatory elements of that and where the opportunities are, where the frameworks are. So I'm Ryan Garrity. I'm the COO of the investment bank at Clear Street. I'm joined by my esteemed guests here. We have Josh Kaufman, the co-chair of capital markets over at DLA, Mr. Mike Blankenship, the co-chair of capital markets at Winston Strawn, and then Constantine Carides, the chair of disruptive technology group at Reed Smith. And we're looking forward to hearing from them. So the goal is to give you just a clearer sense of the regulatory landscape and some of the market opportunities shaping the innovation and future of capital markets, particularly as it pertains to tokenization and blockchain. So let's jump right in. We'll start with digital assets. So clearly the market's evolving rapidly. You know, public companies are holding digital asset treasuries. You know, there's varying degrees of strategies. A lot of the DATs, as you heard on the DAT panel, are trading at discounts to NAV. You know, clearly it creates an opportunity, and there's some regulatory complexity around that. To the panelists, you know, first question, you know, from your perspective, are we finally starting to see some clarity in the regulatory framework for digital assets, or do we think companies are still somewhat operating in a gray area?
Yeah, I'll take the first one. So I think there is a lot more clarity we're starting to get. I mean, we had the Genius Act passed around stable coins. We have the Potential Clarity Act coming in. I think there's been a lot more with the SEC coming out with how they view it. And so the commissioner is very much positive around crypto as opposed to the previous administration, which was, you know, do it by enforcement. And now we're looking at it more of this is how kind of the guardrails around it. Now, it hasn't been completely defined yet, and that's what we're hoping for Congress to act and put something in play where it makes it a lot easier for us to not worry about Investment Company Act, that these aren't securities. But there's certainly more regulatory framework being built, and I think they have the right mindset on it. The stock exchanges, they're also behind the times, and I think we're starting to see some of that as well, how they view digital assets as well as versus fiat and cash equivalents. So I certainly think we're starting to see a lot more in that framework.
I would agree. I think there's much more clarity as to what is a security. We know that Bitcoin and Ether are commodities. We know that meme coins are not securities. But in the area of altcoins, the SEC has not yet been dispositive about what constitutes a security. Thankfully, Chairman Atkins has initiated what he calls a taxonomy project to more clearly define what constitutes, for example, a utility token versus a governance token. So in the future, I think we could look forward to narrowing the scope of what tokens constitute securities and therefore are regulated by the SEC. And on the exchange front, I think NASDAQ has been, you know, very helpful now in clarifying the rules. Over the last 3 months, I feel like they were making the rules as we went along in every single transaction, but I think they're a little bit more defined at this point, so we understand how to navigate them.
Yeah, I agree with my colleagues. I would add, though, that we do need certainty around legislation at the federal level, and we need actual legislation that incorporates the more, I think, commercial-friendly rules and guidance we're getting from the SEC, because just as easily as it moved from very rigorous and bad environment under Gensler to the new environment, it could revert. And unless you have that a legislative framework in place passed by Congress, a lot of the progress we're seeing around clarity and being a little bit more opportunistic and being able to transact could go away. So I'm hopeful the Clarity Act gets passed and it helps accomplish those objectives.
Great. You know, previous panel before Eric spoke, talked a little bit about the digital asset treasury strategies, the companies that, our firm has helped to launch and support. There are a number of folks out there trading at significant discounts, as I alluded to. Clearly there appears to be, some attractive consolidation opportunities out there. From your perspective, what do you think the key regulatory considerations are as we think about advising companies on, acquiring other businesses that, could potentially be accretive to the strategies?
I would look at strategic considerations first and foremost for either an acquirer or a target. Number one, confidentiality. If you're having initial discussions between two DATs, the pricing is the key to the deal. So make sure it stays between you. Sign an NDA. Exclusivity, make sure that the counterparty is not negotiating with somebody else. And third, if you're a target, sign a standstill agreement. Make sure that the acquirer is not going to use the information that you're providing to go out and use it to their advantage.
Yeah, and I would add, depends on how you structure it, because all the DATs, they, technically put a banker's remote SPV underneath the pubco that existed at the time. So there may be some legacy stuff. So if you're a DAT that had some biotech company, that, be cautious of whether or not there's some legacy issues around that and when getting approvals. So you have to kind of look at it from holistically and make sure you have the right diligence, making sure you have the understanding what their custodial arrangements are, who those are, and those are all the things you need to check early on after you're under exclusivity and you've signed that standstill.
Yeah, I don't think there's any specific regulatory hurdle or consideration that you need to be, overly worried about. If you're trying to do an M&A transaction, you need to follow the path that Josh and Mike just mentioned in terms of making sure everything's confidential and you have the ability to transact. But I do think you're going to see a lot of activity and consolidation in the space, given the way some of these companies are trading, and others who are sitting on a bunch of cash who might want to combine those companies. So I think you'll see a lot of M&A activity in 26.
Great. So further to that, right, let's look ahead to some of the regulatory developments that we just talked about. Beyond stablecoin legislation, some of the custody rules, what do you see as the next major inflection point that would meaningfully unlock M&A activity or accelerate the trend?
Well, I think it goes around, spoken earlier, is, definition of what a security is, and are these certain altcoins going to be non-securities, whether the investment contracts or not, for a profit or not. And so having that clarity through Congress, which can only be Congress that can do that through the House, and we do have a bill through there in the Senate, and that may be a lot of changes to that, but I think you have if you get a lot of that kind of clarity around it, and then you have a lot of the infrastructure clarity as well. So we're starting to see a lot more of that around the custodians. Mm-hmm. We have clearing agencies that are behind the times. The rules are behind the times. So you have a lot of those issues as well. And then audit and the way you look at the financials around it are also have to come in line. And so you get all that clarity. I think it will help the market for digital asset treasuries as well as digital assets, period. The utility of them will be helpful for the broader market.
There was an interesting regulatory development over the summer that could facilitate M&A activity. Chairman Atkins suggested that the development of super apps would be welcome. So these are apps that are more popular in Asia, where they combine, let's say, online shopping with brokerage. But I think what his intention was is the ability to combine standard retail stock brokerage with crypto trading. And so I think what this will lead to is a combination of TradFi and decentralized finance into single apps, and potentially the cross-licensing of entities as broker-dealers and crypto exchanges coming into one single app with considerations for cross-custody and cross-lending.
I think you're going to, I think some of the companies that have entered into these transactions and become public companies, you've only seen the first act of what they're going to do. And so you are seeing only a treasury company, and maybe that becomes something that other folks say, oh, I should just acquire that. They have a bunch of Ethereum on their balance sheet. I'm doing a better job of it. But many of those companies will be, and kind of have to be, merging in real operating companies to take place of the shells that they acquired. And when they do, those companies are going to be very different, and the M&A activity is going to be very different. So I think you're going to see M&A activity at two levels. One is consolidation of existing public companies, but those same public companies acquiring entities that are adjacent, supportive, or can help them grow their revenue and bring them into the existing public companies. So public to public M&A you'll see, but you'll also see some public-private M&A in the next year.
Yeah, and I think further to your point, having that sort of view as to, strategically, does it make sense? Is it defensible? It's really important when we're trying to determine, what sorts of activity or transactions would make a lot of sense in the space. So, while digital assets continue to evolve, we're also clearly seeing a broader set of innovation in financial infrastructure, areas that are tangential to digital assets, but equally disruptive. This brings us to our second topic, emerging trends like blockchain and tokenization. We've talked a lot about tokenization today. It's obviously an underlying theme of the conference. Tokenization is creating new ways to represent equities, debt, all sorts of different assets, on blockchain. But it also raises some interesting and unique questions from a, securities law perspective. From your perspective, how close are we to a workable framework for tokenized, equities or funds or even debt for that matter?
Go ahead.
I don't think we're there yet. I think we've just seen the U.S. equity market start to get tokenized in a somewhat haphazard and not fully adopted method by Robinhood and similar platforms. Part of the reason is there's not liquidity, but part of the reason is that there's not clear legal guidelines. And my suggestion for these guidelines would be to either have the issuers themselves issue tokens recognized by Delaware as legitimate securities directly on the blockchain, or to have the issuers issue standard stock and have entities such as Robinhood or others act as, in the same manner as depositories, and file registration statements as on F6 with the SEC, enter into contracts with issuers to wrap the underlying security, and thereby divide the liability, divide the services, and the responsibility for the issuer's statement and the actual trading security among the parties.
Yeah, look, NASDAQ's trying to do it themselves. They've put out a proposed rule around tokenization on their exchange. They also admit that DTC and some of the older clearing systems could potentially cause a problem there, and so you have to modernize that framework, and that's something that I think they'll have to work with the SEC to do. So those are issues, and then again, you go back to how there's still going to be securities, the financials and all of that. How do you do some of that? And I think Josh's right. I mean, maybe do wrap it around and get it in that system, and it will help on that financials and audit and the way you do that, the mark-to-market and any other kind of way of getting the financials done.
Yeah, the tokenization projects that we're working on and we're seeing advance or not necessarily in equities, they're in commodities, they're in real estate, which are more, which are easy, not easier, but less of a legal challenge to get into place. And I think you'll see a lot of that activity kind of really take off in the coming months and years. And I do think there needs to be more clarity around the tokenization of equities, because you are triggering a whole bunch of laws that might be inconvenient, but still have to be managed in order to accomplish tokenization of equities. And unless there's some sort of relief from Congress or some support of a framework that would allow it to happen more easily, I think you're going to see some challenges. And the projects you're seeing that they say they're tokenizing equities, if you kind of peel the onion back, it's a very limited pool of investors who are able to invest in those equities right now, and so it's not a real widespread, and that's why you have liquidity issues that you mentioned, because there's only certain types of investors that can do it. But I think ultimately we will get there. I don't know when. The demand is there, and there certainly should be a way to structure it in a legal way that provides ample protection for the folks who participate in that part of the economy.
So to that point, right, we talk about broader adoption, particularly institutional adoption. From your perspective, then what do you think is really holding back broader institutional adoption? Like clearly the regulatory piece is a large component of that, but to Mike's point, there's also some operational issues that have already been flagged. Is there something else that we're not seeing?
Yeah, the equity trading is inefficient in those securities. It's in addition to being illiquid, there aren't sufficient market makers trading these stocks. It's not the full basket of stocks that are available. And I think people are legitimately concerned about the security of their assets, how they hold them, how they transmit them. Can we solve that through insurance? Can we solve that through indemnity? I don't think these things have been fully worked out yet, so people don't feel comfortable with holding their assets, particularly public equities, on their own wallets in the same way that they feel comfortable holding them through broker-dealers.
Right. I would agree with that. I would also say that the pool of investors that can invest directly in the same equities that they might tokenize is a significant challenge too, because folks who are more comfortable or used to holding their securities directly and not necessarily through a token. I think it's more appealing in other countries that might not have the same access and ability to own shares, and I think that's where you'll see a lot of the growth initially.
Yeah, and around information, to your point, make sure there's an asymmetric information, knowledge of it. The key is to get adoption of it, and how do you get people believing in it, and that's a real difficult thing. I do think having a national stock exchange try to do something is a big step forward to get there.
Great. So beyond tokenization, right, some of the underlying trends here, blockchain technology, it's obviously emerging as a foundational element for market infrastructure. It's going to change a lot of the things that we currently see today, decades old, archaic systems. As blockchain technologies, mature, are regulators beginning to recognize, this foundational technology of market infrastructure, rather than focusing on some of the roles that have been played in some of the speculative digital asset trades? Like, are we seeing, these folks understanding that there is very real technology that is transforming the way folks interact in the market?
Yeah, I would say the number one consideration is globalization of markets. So the SEC has acknowledged that in two respects. One, they're looking quite closely at what constitutes a foreign private issuer who's accessing the U.S. market. And I think they're also looking at, who has recourse in the U.S. legal system for sales of securities. They need to consider that because the shares are now trading around the globe, and as you tokenize everything, they'll be able to flow freely everywhere around the world and not just be limited to the system that's operated by the depository trust company. Second, markets in crypto are operating 24/7. It's not just the market hours of New York Stock Exchange and NASDAQ. So companies have to get used to reporting events and responding to events on a full 365-day, 24-hour, 7-day-a-week cycle. And I think regulators need to be responsive to that. So a few changes that are required.
Yeah, that's interesting to point there, because the SEC is now going to propose current public companies report even less on their to do half-year reporting instead of quarterly, make that choice. So it really will come to that. And whether traders really want 24/7 or 24/6, or always continue trading is going to be an interesting point. and how do they regulate that all? How are the regulators going to handle that? And I think on the blockchain, they're getting up to speed in technology, much the way that government always is behind in technology and innovation. It's really getting those people in there. Well, who's going to police and understand that? And so you're going to have some true experts in there. That's also probably a concern for some is, are these regulators ready to actually regulate this area? Do they understand it the way that the folks in this room understand it? And so I think those are critical questions for investors as well.
Yeah, and I think you just also have some latent old line businesses that are going to be disrupted that still have a hold on the marketplace in terms of moving commercial activities to the blockchain that are slowly being phased out in a variety of industries. And so I think that's just a matter of time and generational change a little bit. What you'll see, tremendous amount of commercial activity on the blockchain. I don't think there's any real regulatory impediment to moving some of that commercial activity to. It's more just what's customary, who's in charge, and who's going to get displaced, and it's all moving very quickly. I think Eric Trump spoke to that quite a bit in terms of how there's so many different parties taking economic interest in transactions that in the future will be direct between the end user and the seller or the promoter. So I think that's just a matter of time and process and adoption, and I don't know how to say, clearing away some of the dinosaurs that are in the game right now.
It's a great point because the threat of displacement is as massive in the securities industry as it is in the banking industry. But that threat hasn't come to the fore yet.
Yep.
So you're threatening broker dealers, you're threatening the depository trust company, and you're threatening the stock exchanges themselves. And obviously you'll need new ventures that replace those functions to a certain degree. Will those functions be in the super apps? Will they, be the same organizations that serve a new role? We don't know, but there's definitely going to be disruption and room for competition.
Yeah, it's an interesting point. Which sort of brings me to the next question. Around the legal and compliance hurdles, right? So we're talking about broader adoption, across market participants, how infrastructure, is starting to clearly outpace the regulatory piece. To your point, Mike, the regulators are usually very slow to react. What do you think remains as some of the key hurdles, and we talked a little bit about this, the really, widespread adoption of true on-chain settlement of U.S. securities?
I think partly you have a clear DTC there that's going to have to do it. We do have settlement now at T+1, but can you have zero settlement, or T0? It's certainly possible to get all the participants to do it. I don't know that we have it all just there from a regulatory. Again, you have old custody rules, you have broker-dealer rules to deal with, and so you have all these things that have to come together to get the complete settlement on a T+0. So you have that. There's no issues with a trade not being settled, and so I think all of that's important, and maybe it is on a super app, maybe it is something that people can see instantaneous there, that they're the trade of the security. But I think we still have a little bit of time, but they're still trying for that T0. Hopefully it's soon.
Oh, I agree. I think the blockchain is the ultimate culmination of the process of what's called disintermediation. So stocks used to be traded by certificates that were wheeled around Wall Street on shopping carts, and obviously we moved to uncertificated stock trading, in the 50s, 60s, 70s, and now, we need to go full scale to blockchain. It'll make everything more efficient and more effective, and moving from centralized DTC to decentralized will do the same thing. The more efficient settlement from T+3 ultimately down to T+0, and then the elimination of fees. There are too many fees in the system that increase the cost of trading. So I think that ultimately can bring the institutional investors on board and get them over the hump to drive the volume that's necessary to bring critical mass into the blockchain trading system.
I would just say it's really hard to displace entrenched interests, and it's going to take a while for that to happen.
Yeah. So we've only got a couple minutes left, so we'll just do very quickly, interested in your perspective, right? Clearly from your seat dealing with, evolving regulations, whether it be with the commission or the individual exchanges, to your point, Josh, I agree. I've been on a lot of these calls. It sort of feels like depending upon which representative you get at one of these places, it's a completely different story. But we're starting to get more clarity around that. Each of you just give me very quickly your view or prediction, where we're going to see digital assets or more broadly tokenization in, call it 12 months time.
Yeah, I think we're going to have broader adoption of tokenization, and equity will have more clarity around for equity markets. It is a focus. We see that with Chairman Atkins coming out lately. We know that they've trying to make the markets move and have more liquidity out there, and so I think we'll start to see more of that from that end. Obviously CFTC has its way of doing things as well, but we'll certainly, my prediction the next 12 months, you'll see a lot more activity, although we've seen a ton of activity over the summer until now, but I think we'll have a lot more clarity by then.
Yeah, I think we're going to go product by product. Obviously, there's been the biggest boom in terms of stable coins, but private credit, has seen a nice market. U.S. government bonds have seen some activity. Corporates have seen some activity. But we really need sort of a market mover like a BlackRock to take a position in one or the other and create that demand. And a consensus of institutional investors in any particular product could drive growth in that product.
Yeah, I would agree. I would say, once again, that in order to really achieve lasting change and a framework that can be relied on for multiple years, you need to have legislation passed at the federal level that embodies all of these different changes that I think would be welcome and would provide the clarity we need. Until you get that, you're relying on an administrative interpretation, which can change if the administration changes.
Yeah. It was really only after the Genius Act,
Yeah.
to your point, that we saw the boom in stablecoins and the IPOs of all
Right.
the stablecoin companies. Yeah.
And then even there, you're getting pushback from multiple states against the federal regime that was passed, which I think will resolve in favor of the federal approach. But yeah, it's that type of DC-focused legislation that's necessary to achieve the clarity needed to be able to have a multi-year perspective on these things.
Great. So we're just about out of time, and we've covered a lot here, and I just want to thank the panelists for their insights in these topics.
Thank you.
Thanks, guys.
Thank you.
Thank you. Very nice. Thank you. It's a pleasure.